In this video, guys, we're going to talk about trading advice that I listened to, but I really shouldn't have. Stay tuned. Hey guys, warm welcome to you. All right, so 5 pieces of trading advice that I listened to that I really shouldn't have. So maybe you can avoid this for yourselves. Let's go. Number 1. The first one is you don't go broke taking profits. I hate this. And when someone says it to me now, I cringe. I'm like, yes, technically, but in reality, you want to be able to run your trades. That's where the real kind of equity curve boost comes in, is when the trade is running, it's running, and you manage to squeeze as much juice as you can out of the move. The fact that you're snatching profits quickly, yes, you won't go broke, but the trouble is it doesn't allow for those losers. You know, you're not talking about the losers here. Theoretically, if every trade was profitable and you take in money, sure, you're going to grow your equity curve. But in the real world, there's some losers out there. And if your winners aren't out offsetting your losers by a substantial amount, you're not going to make money. So if you're letting your losers run, but you're not letting your winners run, you know where that ends. It ends in the poorhouse, guys. The point is, I guess it's well-meaning. All these sayings are well-meaning. They're not malicious, are they, anyway? You don't go broke taking profits. But often I think it's people justifying grabbing profits too early. The person who says that is justifying to themselves why they are grabbing the profit now, when in reality, they probably should be looking to hold it. Because I would rather now hold a trade and have it come back on me by a substantial amount and end up coming out, you know, for a small profit or even a small loss. But I had the potential, and I recognized that I had the serious potential to have a big run that didn't work this time, because I know that over time, if I'm in those trades and I'm holding those trades, then I'm going to be on the end of a really big run. So ignore that advice is my advice for that. The second one is know when to bend the rules. I can't remember who told me this one. And I kind of almost remember it in my head now. I can't remember the person who said it to me, but it's like, oh, we got to know when to bend the rules. And it was after they made a big trade, and I remember I just kind of started trading in my first few years of trading, and I thought, yeah, well, that makes sense. You know, he bent his rules there and he made money for him. No, guys. Do not have that as an excuse to bend your rules. We are trying as traders to have an ironclad discipline. The rules are the rules. If you start bending rules, then you're going to be trading from an emotional perspective. You start moving stops. You start to trade too much position size. You start to trade a setup that's not truly a setup. You start doing all of those things. You know yourself probably that ends up again in a bad position as a trader. Be very strict. Yes, you're human. You're going to break some rules from time to time. It's going to happen. It's easy to say, oh, just don't break your rules. We know it happens, guys. We're human. Sometimes we slip up. Discipline lacks a little bit. But if we allow it to happen, that's when the danger comes. If it happens and you go, well, you know what, I shouldn't have taken that trade, let me go back and be iron disciplined about it, then you can improve that discipline muscle. And there are loads of videos on this, but that is such a bad bit of advice. Do not bend the rules. If you want to have some flexibility, put it into your trading plan. So what I mean, you have your trading plan, and maybe you have some little caveats in there that say, well, if this, then you're allowed to do between this and this. Example, position size, okay? If you've got a grade A trading setup, so you've graded your trade, and you can find out more about that in a kind of description below. We'll talk about grading trades quite deeply. But if you're grading your trade and it's an A+ trade, you might say to yourself, well, I allow myself to go, maybe you're trading 2 lots at the moment. I allow myself to go up to 5 lots on a grade A. So you're giving yourself flexibility, but you're not bending the rules because it's part of the plan. That's the key difference, guys. Rather than just on a whim, trading a 5 lot when you feel like it's like, well, if this criteria is met, then I've got the opportunity to scale up to 5 lots, £5 a point, £50 a point, whatever I'm trading, whatever vehicle it is, because of that. That's the difference. All right, guys, number 3 is you need to be there to capitalize. This was again a day trader saying, and you know, this is a bad thing. Guys, you know, I'm an advocate of taking breaks. It's so much better if you're day trading now and you're sitting there all day long on your chair in front of your screens. You cannot be expected to perform at your peak from the open all the way to the close. It's just not going to happen. You might think you can, but you can't. You are far better off from a return perspective having a break in there at some point, and you will miss stuff. You've got to accept it, but we are here to do whatever we need to do to get the biggest payoff, right? This is what we're about. We're about trading. We're about making money. So if I said to you, staying at the screen will make you 1, going away from the screen over time will make you twice that amount. What are you going to do? You're going to say, well, I'll take that all day, every day. Now, that's basically what will happen, but we always think we're going to miss out on something, and we come back and we see something's moved without us. And this was the saying, was like, you've got to be there to capitalize. Yes, you have, but not at the expense of sitting there all day long, every day, 5 days a week, and just smashing yourself into the ground, because you'll end up not being able to capitalize on those good trades that come specifically with the US close. And this is kind of perhaps for more European traders who are trading throughout Europe and they're trading throughout the US. You know, that can get tiring. All right, number, where are we? 4. Go big or go home. We hear this quite a lot, don't we, guys, with traders, especially kind of chest beating, go big or go home. I get where this comes from, right? This is like, okay, you should be pushing your chips in when the time is right. And I'm a big advocate of that. If you've kind of looked at the channel, or if you're a subscriber, appreciate your support, by the way. If you are, then you know that often we talk about, hey, when the things are right, then just, you know, squeeze it. It comes back to grading the trade type thing. Then, you know, put a little bit more risk on. Don't be frightened to do that. But going big or going home for everything, to me, doesn't make sense. There are some trades that just don't really match up. They're still worth taking. I still don't mind putting a bit of risk on it, but I don't want to go big on every single thing and swing for the fences, because to me, all trades aren't equal. So, you know, whilst it's a kind of probably from the pit saying thing, well, you got to go in if you're going to do it, and I get where it comes from, but in reality, I think we've got to be a little bit more measured with our capital allocation. Final one, guys, we've got a star buy, which I'll tell you about in a second, is trust your gut. Now, this is advice I wish I hadn't listened to back when I first started trading, because your gut doesn't know anything. It's like you've got no instinct. Like I say, well, trust your instinct, trust your gut. Well, if you've only been trading for a short period of time, your subconscious got nothing to draw anything on. Now, definitely trust your gut. You've been trading for a longer period of time. Definitely trust your instinct. Definitely leverage on that. I've done a video specifically on that. But at the beginning of a trading career, you don't have any experience to leverage on, because instinct really is all the information coming in, your subconscious saying, you know what, I don't like this deal, I don't like this person, I don't like this scenario, I don't like this dog, the way it's looking at me, I don't like those group of people over there, I don't like this floor I'm about to stand. You know, whatever it is, your gut will say, because it's based on experience from before. Whereas in your trading, I don't like this trade, you're not basing anything, and it's a mistake early on to trust your gut. You say, listen, don't put your gut into it, allow it to develop, and then later on, when you can kind of prove, and this video talked about that, we can prove that it's got some worth, then add it in. But at the beginning, don't trust it. Anyway, guys, those are 5 pieces of trading advice that I listened to, and I really shouldn't have. Take care. Bye-bye.